Hello, good day traders. We're going to do a technical analysis today on EDWY. That's E-Doorways International, trading on the pink sheets for August 15th, 2012. So let's go back a little ways here on the technical analysis. We see back in late February, March, volume started to come in here in the first 2 weeks of March. You can see volume back up in here, starts to pick up, and then the stock just takes off on a wonderful run. Hits a high of 16 cents from a low of 1 cent in just a matter of days. So big explosive gains here, and then we saw a pullback on the stock. Now we basically saw a trend, a downward trend here. I've drawn a red trend line near the high points, pushing it down, and we had a little bit of a breakout past the resistance trend. Unfortunately, if we take a look at volume, see volume has basically disappeared at this point in time. So there's not a lot of volume really to push the stock up very hard, and we basically had a mediocre run at best, and then the stock sort of fell back into another downward trend. I've drawn another red line here. Again, we tried to get another breakout. The stock started to reverse back up. Again, volume at the breakout point is very minimal. Not a lot of trading volume going on. So again, there's not a lot of buyers to push that price up very high. And again, we saw a third pullback here, and this one's least steep. It's more of a sideways type movement. Not a lot of trading going on, or volatility, I should say. But what we do see is volume start to come in. We had a very explosive day just back in early August, 1.25 million shares traded, and then the last several days you can see the volume starting to pick back up again. So we're pushing up against that resistance trend. Now this is the ingredients that you need to have a nice solid run. You need to have volume as strong as possible, because the stronger the volume at that breakout point, the harder it's going to run. Now we don't yet have a breakout. We've got this resistance trend that needs to be broken. Any move above the last high or above this resistance trend is going to confirm a breakout. You use one of two methods. You could probably safely say any move above 3.5 cents, which was the last high point, is going to create the beginning of an upward trend. What we should see is higher high points and higher low points. Already we've got a higher low point here. We can see we hit a low of 1 cent and then 1.2 cents as a higher low. So that's the beginning of a positive reversal. Now what we need to do is break that resistance trend, and the volume is certainly ripe for a nice run. You can see that if you look at the length of these downtrends, this one was over a month. This one was about 2, maybe 3 weeks long. This one here is about a month and a half, so we're definitely due for another reversal. Taking a look at the MACD, this gave excellent buy and sell signals when we had volatility. You see it was pointing up. Then we had a crossover point right around the beginning of April, signaled that the rise had ended, and we did see a pullback come after it. From here, the MACD's basically been whipsawing back and forth, so it's not really giving reliable signals. There's kind of short-term delays, but when we get the volume back in, certainly this can become a reliable indicator again, so keep that on your radar. If we get a breakout, you're going to see that MACD open wide up, and you can always use it as a sell signal when it crosses back over again to take some healthy profits if you do decide to take an entry point from here. Also, we can see the accumulation is starting to kick back up into high gear, and this is because we're seeing that volume start to increase. So now we're getting the accumulation distribution line starting to shoot up because there's a lot of volume coming in and people are starting to accumulate shares. Thanks very much for watching, and happy trading.